and there is something called Motive Wave. Motive Wave is also there, one software called Motive Wave, but you may get only trial version, but after that a few stocks will be available for you. Not everyone, everything, maybe Nifty, those stocks will be available. Motive Wave is one.
Sir, good morning, sir.
Yes,
Yeah, we'll
yes.
start. We'll start. Caroline, shall we start now?
Yes, sir. Yes, sir. Yeah. So, good morning and welcome to day 2 of Demystifying the Stock Market using technical analysis tools with Mr. Saravana Krishnan. Yesterday, we had a very informative and interactive session where we learned why the stock market exists, how it works, its constituents, and also how to pick companies to invest based on various factors as explained by him. I would like to welcome you today morning, sir, and we look forward to learning more and expanding our knowledge horizons on demystifying the stock market. Over to you, sir.
Thank you, Caroline, for the warm welcome. Pleasant morning. So once again, good morning to everyone. Kishore, we will take your question a little later. Don't worry about it. All right. We will start with today's session, and yeah. So hope everyone doing good today morning. Just to have a check. Can you just respond for this message? Yes. No. I'm sure that everyone is doing good. Yeah. Thank you for that. All right. So just a recap of what we have done in the last class. And before proceeding, I just would like to tell you something. This, whatever you're learning under technical analysis, until unless you practice, it's of no use. In the sense, for example, I did my few technical analysis courses in the year, let's say 2010-11. After that, maybe let's say I've not used much of technical analysis, or whatever I studied, I did not apply on the same day or within that week. Maybe I took a break of 6 months. I couldn't apply anything. Then later on, I tried to apply that. So whatever I studied in full-fledged, I couldn't apply. I think most of us have the same problem. Once we study, if you apply on the same day and you start practicing, definitely this will be a useful thing. But whatever, okay, it's a session, we learned something, and you forget today, you will not apply this, then you'll not learn, or you will not remember whatever we have studied in this 2 days. So my sincere request is to you try to apply on everyday basis. Take your half an hour time in your day and apply this tools. Whether you trade or don't trade.
Saravanan,
Yes, sir. Yes,
some
sir.
problem at your end. We are not able to hear you.
My network is good, sir. Am I audible, sir, now? Am I audible, sir? Kishore is saying audible. We are able to hear. Sir? Okay, thank you. Thank you. Sir, maybe I think you are unable to hear. I think everyone is able to hear, sir. Sir, am I audible to you? Okay, hope others can hear me. Yeah, I got good responses, I think. Yeah, okay. Carolyn, just can you message sir and tell that sir side there is some issues?
Yes, sir. I've spoken to him, sir.
Okay, all right. Yeah. All right, fine. Let me continue. So please do practice. That is very important. All right. If you don't practice whatever, it is going to be just in today's session only. And if you practice, what are the benefit you get? It is not just it's part of MBA you're learning. You can become a full-time trader if you are. It's a business, okay? It's not just a trader. Trading is not. How many of you feel this stock market is something like gambling or speculation? Any idea? How many of you feel stock market is gambling? Anyone? Can you say yes, it is gamble? Anyone, if you feel, you can say that it is gamble. Okay. Like gambling. Okay, sure. Sometimes. All right. Okay, Caroline, yes, it is. All right. There is no logic. Okay, fine. Everything has a logic in stock market. If logic is not there, we try to create. That is what even our life. Do you understand how our life moves? Pratima, Caroline, Sharath, Sunil. How much ever you plan your life, some kind of risk we take, a bet we take, correct? But we will not take those bets blindly in our life. Yes, we never take in our life some bets on blind. We take those bets on a thorough analysis, correct? It may be joining an MBA institute. You would have done some kind of analysis, then you got into that. But still, you're not 100% sure, correct? But you did your background work or some kind of work to join that course, then only you joined it. But you are not 100% sure. Everything in our life goes like that only. We are not 100% sure, but we do what is required for us. For us, what is required? A minimum level of research to satisfy ourselves. That is what we are doing when it comes to life. Stock market is also similar. There is no change or there is no difference. How life goes, the same way the stock market is also goes. So it is also same way, but we don't call this as gambling. Gambling is when you don't know anything and you just, for example, buying a lottery and investing in a stock. It has two very, very big differences, right? Lottery ticket you are buying in many states has been barred, whereas in Kerala it is very popularly sold. When you buy a lottery ticket, on what basis are you buying a lottery ticket? Do you have any analysis on that? Just like that, you pay 10 rupees, 1 rupee, 5 rupee, 15 rupees, 50 rupees, 100 rupees, 500 rupees, 1000 rupees lotteries are available. Just like that, you buy. And for what you will wait based on your luck. And most of the time, it will not come for us, correct? Yes or no? So, that is what pure gambling. Kerala, it is allowed. In Kerala, it is allowed. Whereas in Tamil Nadu and Karnataka and all, it is restricted. Government itself restricted. Now, let's say another example of this gambling. Sometime back, whenever this IPL was played, individually people will start betting and they get into bets. Like for example, if CSK and RCB is playing, then people, Dream 11, I'll come to that. CSK and RCB play, then I and Kishore Kumar will get into a discussion. I say today RCB is going to win. Kishore is telling CSK is going to win. Let's say we have a bet and we will bet, let's say 500 rupees. Or let's say when you are playing cards, that time again betting. When you are playing cards favorably, most probabilistic is not there. The playing cards always based on your what kind of cards you're getting. That is called luck, correct? Based on what cards you're getting, based on that only you can play. You cannot change the cards, correct? Same way lottery is. But whereas Dream 11, you can pick your own team. You can pick based on the analysis, based on the past performance. That is why Dream 11 is being approved. It's not a gambling site. It hasn't been approved as a gaming site, correct? Same thing with stock market. Stock market is not gambling at all, but people do gambling. Why? Because they just get more excited by looking at the lucrative money in the stock market, and they believe they can also make money, and blindly they'll buy and sell things. That is what happens in the stock market, and people will tempt to lose a lot of money. In that way, people are there, even who are not knowing about the stock market, they are doing gambling in the market. So they are called as gamblers only. But you guys, as an MBA graduates, you are supposed to study, understand, do your analysis, then you are supposed to get into the stock market. That is an analysis. That is why we have a chance. We get into probability. Statistics comes inside, right? When statistics comes inside, we are not doing gambling. We are trying to find out what is the probability of making profit or loss in that. That way, you are doing your analysis and going ahead. All right. Fine. So hope you understood what I'm trying to tell, the difference between gambling and things. So stock market is not gambling until unless the person is not knowing anything, and if they're trading, then only the stock market becomes gambling. Otherwise, it's not gambling, right? If you are knowing things, you're studying and doing, then it's not gambling. You are finding out the probability. Very important word I'm using here, right? Here you are making the probability. For example, whoever does MBA, everybody will get job. Can you answer my question? Yes, no. Can you guys please put in the chat box? Yeah. Am I audible, guys? Sunil, are you there? Shruti, Carolyn? Yeah. Yes. All right. So we'll move ahead. We will not waste much time in this. So it's not that everybody get into an MBA, they will get definitely a high package job, correct? High package job. It depends on the person's skill set. It depends on the person, how he caliber in the next 2 years of the program. Depends on all that, correct? Then only you can say that you are prepared well for that interview or that particular job role, then you may get a job. So the same way, the probability. So how much you prepared, based on your preparation, I may say 80% chance you get a job, or 90% job, 90% chance you get a job. So that is what the probability I'm talking here. So when it comes to stock market also, what is the preparation you are doing to invest or trade? Based on that, you can say how much, probability you can make money in that. So don't assume that it is gambling. It is not. Okay. And very important thing I will tell, people are taking this as a business. For example, if you go to Bombay, anybody from Bombay in this class? Mumbai? Anybody from Mumbai? No one? All right. So in Mumbai, a lot of people actually take this as a full-time job. Not only Mumbai today, even in southern region also, there a lot of people started taking as a full-time job. They don't want to go and work. They work for themselves. It is like doing your own business. We will come to this at the last part of our session. We will not get into much that. We will start quickly with what has to be covered for today. Okay, Pratima is from, yeah, more in Gujarat. You are right. Gujarat is one place where stock market is very popular. And then Maharashtra. All right, let me share my screen. So I've connected my secondary device, my mobile, so that I can check your messages in that. Okay. All right. So day 2 starts here. Just to recap what we have done in the last class quickly, very important. We have actually started with the introduction, then we came to fundamental analysis, then we also saw some, fundamental reports, how it has been written, and we try to link with the EIC framework. That is what we have done in the last class. After that, we have done like downloading the data from the NSE, National Stock Exchange National Stock Exchange website, and I showed how to download the data, that is equity data for the current today's data. We downloaded from that. We generated signals when to buy and when to sell based on the open equal to high and open equal to low. So this is a simple formula everybody can follow. It is like in the early morning, that is early morning in the sense 9:15 to 10 o'clock. Within 10 o'clock, that 45 minutes, maybe you can actually make some little profit and you can come out. That is one of the tool where everybody can start with. Even I do sometimes like that. Okay. So then we discussed about different types of charts. Then we discussed about the candlestick. Then we discussed about the Dow theory. Then we discussed about accumulation phase, markup phase, and distribution phase. Then we discussed about the important, very, very important tool, that is support and resistance. Okay, we can calculate the support and resistance to using the pivot calculator, and also we can do that manually. That is what we have seen in yesterday's session. Now let us get into today's session without wasting much of my time. Now today we are going to see a lot of patterns, and then we are going to use some indicators. If you ask me as a technical analyst, sir, how good you can make money from technical analysis? Can somebody tell me? Whoever is, maybe yesterday some people were trading. Can you guys tell me how good you can make money from technical analysis? Or you would have heard from some people, or you would have know, or you would have understood a little bit whether whatever we are studying, it's useful to make money really, or to at least understand and analyze the market. Yes, are you guys are there? Can you please respond in the chat box? You guys are not active. Yeah, okay, so you feel you can make money. That is what I am taking your SS. All right, fine. So the technical analysis we discussed yesterday itself, by observing the past data and drawing a chart on based on the past data and trying to predict what can happen in the future based on the past records. That is what we are doing in technical analysis, correct? So we have different patterns also, where in the graph it's been formed. For example, the patterns are, example I'll tell, that hotel or the food street itself you take. Okay, let's say on Sunday morning 8 to 9 it's more crowded and all the products will get sold at that time. When you go in the evening around 4 o'clock, there won't be any much people, and you can actually peacefully eat. But after 5:30, 6 o'clock, or after 7 o'clock, there is a huge crowd in the same counters. This is what patterns you are identifying. The same way, we can understand when there is bearish moment or when there is bullish moment. Hope you understand this word bearish and bullish. What is this word bearish and bullish? Bullish means when you expect the market to go up or the market is continuously going up, then we call this as bullish market, bull, right? It is keep on going up. That is why it is called as bullish market. When you expect the market to come down, then we call that market as bearish market, because we don't like this bearish market. It's negative, but still you can make money out of bearish market. Hope everybody know about short selling. Can you guys please respond in the chat box? Do you know what is short selling? Santosh, you said yes now. Yeah. You sure? Others? Shruti doesn't know. Okay. Okay. Just quickly, I will explain the short selling. Very simple it is. Okay. Short selling is nothing but without having the shares, you can sell. It is allowed in the stock market. Can you understood, Shruti, what I'm telling? Without having the stock. For example, yesterday we discussed Wipro stock. Okay. Without having Wipro stock in my demat account or in my hand, I can sell that stock. It is allowed in stock market. That is called a short selling. But the thing is, within a day, you have to buy from someone and settle it. For example, very simple example, I'll tell you. Okay. I sold a mobile to, let's say, Sharath. Okay. I sold a mobile to Sharath, and Sharath is supposed to get a mobile from me. But Sharath already paid money to me. He transferred money, 10,000 rupees to me. But I did not deliver the mobile to him. But what is the account here? Already sold. Correct? Mobile is sold to Sharath. But I did not deliver the product to him. But I don't have mobile phone also. So what I will do, I will buy from you, Shruti. I will buy from you and I will give it to Sharath. This is called a short selling. So this is allowed in stock market. Without having the product, you can sell. Hope you understood. Shall we proceed, Shruti? Yeah, all right. So there are different types of chart patterns we're going to discuss today. So chart patterns is a shape. You can see here, it's a shape within the price chart that helps to suggest what price might do next based on what they have done in the past. So that is what we are going to understand based on the past behavior, how this pattern is going to help us. That is what we're going to understand here. So chart patterns are basically technical analysis and require a trader to know exactly what they're looking at and as well as what they are looking for. Both are important. Okay. Disclaimer. See, very important in stock market, these disclaimers we will put everywhere. What is this disclaimer? The most important things to remember when you use chart pattern as a part of your technical analysis is that they are not a guarantee that market will move in that predicted direction. Okay, that is what our life and stock market for you. Whatever analysis you do, only probability we can make. It is not 100% sure. Okay, but definitely it is better than astrology. Okay, don't think astrology is better than this. So this analysis, these predictions are better than the astrology. Our life itself, it goes like this only. It's not guaranteed that we are not going to live up to 100 years, 70 years, 60 years, 80 years, whatever it is, correct? And you would have seen in this COVID pandemic, there is no guarantee for anything, correct? So it's just an indication of what might happen to an asset price. That's it. So we're going to discuss so many patterns today. Let us quickly cover one by one, and I will show you in the real-time market also how it works. Let me come out of this slideshows. All right. So hope you are able to see this. So what we're going to see is first one, bullish, bearish, Marbuza. Let's see what is this Marbuza. See, can you see this green color and the red color? So the green color patterns, that whatever we are going to discuss, it is for bullish. Bullish in the sense we are expecting the market to go up. So bullish Marbuza and bearish Marbuza. So we're going to find out in the real-time market now, this Marbuzas, that is bullish Marbuza and bearish Marbuza in the real-time market. So what does this bullish Marbuza says? You can see here, bulls dominate the market. So how it will be looks, how it will look? It will look like this, just one candle. There is no wigs. Can you see on the board the sides? There is no wig. So a long green candle, no wicks. That is what this bullish Marbusa. Whereas the bearish Marbusa is same, but it will be in red in color. Okay, whereas this is green in color and no wicks. So we're going to find out in the real-time market now. Are you guys ready for that? Are you guys ready for that? Yeah. So you are going to find out and tell me now. I'm not going to tell you. I'm just opening the chart for you. You are going to tell me the Marbuza. You have to identify the Marbuza from this chart. Okay. Let me open some. Let it load. Yeah. Okay, done. So let me click on candlestick. Then I will go to, maybe this is interesting stock I've been watching in the last few days. So let me open this. Okay, IDFC First Bank. Heard about this company? All right. Can you see this now? We'll keep it for one day. Yes. Can you find out Marbuza here? You can actually tell me bottom. You can see the date or number. I mean, the month and date is given. Based on that, you can tell me where it is available. Marbuza, Marbuza candle. Or let me take intraday chart. Let me take intraday chart. 15 minutes. Okay. So, Kishore said it is available in June. 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 I'm not able to identify anything. No Marbuza. Both the sides candle wick is there. Maybe if I can zoom for you. See, both the sides wicks are there. Without wicks, can you find out? I'm moving for you. Just I'm keep moving. If you find anything, April 13. April 13. Where is April? Okay, 9, 10, 11, 12, 13. No, it is not there. Santosh, it's not there, Santosh. You're telling this part, no? Can you see my cursor? Nowhere, 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 nowhere. Okay, let me go to 15 minutes chart and we'll find out. Can you see now if there is any Marbuza? Can you guys see any Marbuza now? Exactly. Yes, Sunil, you're right. Yes, yes. Superb. You guys got it right. See, I will just mark for you with arrow mark. This is one. This is one. So you can see such a big Marbuza. Okay, what Marbuza say, it's in red color. So we'll go back to the PPT. It is bearish dominates the market, a long red candle, no wicks. So it is bearish. So look at this. You can see it is long red candle. After that, the market has fallen, you see. So it is very simple that IDFC Bank has fallen after forming this particular graph. And you find one more Marbuza. Can you see here? This is one more Marbuza, but it's not that long. It is not that long, but still it is formed here. Can you see this? After that, it tried to went up, but it didn't go. It didn't go. See, but it didn't fall also. It didn't fall also. Here again, Marbuza actually formed. Can you see this Marbuza? Green color Marbuza. Are you guys following it? Are you guys following it? See, this is another Marbuza. Where from here, see, it has picked up just like that it went. Just like that it went. So if you are able to capture this Marbuza in the market, then this is another way of getting into. This is a place when you find this Marbuza, next 1 or 2 trading, it started going up, or you can buy at this level, okay, and keep below this Marbuza candle. You can keep your stop loss. You know what do you mean by stop loss? If you guys know what do you mean by stop loss, then it's great. Otherwise, I'll explain what is stop loss. Okay, so everyone know about stop loss, correct? So no need to tell about stop loss. That's superb. If anybody don't know, please let me know so that I can explain. Need to sell if goes below. Exactly, Pratima. Exactly, you're right. Need to sell if it goes below stop loss. Yes, you're right. Okay, so I'm just opening this Jamboard only to just write something. Okay, let it be there. If anything I wanted to write, I can write. Okay. So Marbuza we understood. So easily we can actually identify these Marbuzas, and based on that you can take call. It should be long. It should not be a smaller one. You can see here also Marbuza, it is very small, and here also one red candle, it is very small. That will not give you any effect. So according to the rule, or according to the understanding, pattern understanding, it should be a long red candle or long green candle, then only it is Marbuza without wicks. Okay, let us find out. Can you try one more graph? Can you try one more? You guys try one more. Shall I open? Yes, no? Okay, you guys are going to try now. I will open a stock, maybe Nifty. I will open for you. From Nifty, it is only for intraday. Please remember, intraday trading means, you know, I hope intraday is what? Opening today. I mean, anything you buy today and sell today itself. It's called as intraday. And short selling is also allowed only for intraday. Please understand. Okay, let me open the 15 minutes graph. Okay. Can you find out some Marbuza in this? Okay. 5.0. Where is it? 5.0. Okay. The latest thing. Can you say? You will not find any Marbuza here. Okay, but there is a small wig is kept, so that cannot be a Marbuza. Let us go little this side. Can you find anything in this screen? Yeah, four. This one, this green candle. Cyril, there is a small wig, or this small candle will not. 6 very but small. No. Small. This one. No, no, no. We need to have a long stick. Yeah. See, this is looks like marbuza, but there is a just hairline wig is there, but still. Can you see here? I got one. Can you see here? I got one. After that, there is an upward movement. See, I put an arrow mark now. Can you see that? Mega? Green color wig. Yeah. Sorry, green color marbuza. All right. So Nifty, we are not finding much actually. So Nifty, there is not much marbuza. Okay, we will move to the next stock. Next thing. So bearish marbuza and bullish marbuza. Hope you understood. There is no doubt in that. Let us move to this hammer and hanging man. Whereas in bullish indicates a possible reversal upward when it comes in the bottom side. Look at this. Read this. It's a short body, long lower wick. See, long lower wick. That is, in the bottom side, the wick should be very long. No upper wick. No upper wick. Occurs at bottom of the downtrend. Then it is going to be bullish. That is called as it is reversal. It is called as bearish reversal pattern. We call this as bearish reversal pattern. Okay, so this hammer we can find out. Same thing if in the in the top if you find out, then it is called as hanging man. See, occurs at the top of an uptrend. Whereas if occurs at the bottom of the downtrend, then it is going to take a reverse and it is going to go up. If it is on the bottom, in the top, then it is going to take a reversal and it is going to come down. Okay, let us see that now. Hammer. So again, 15 minutes chart. Okay, let us find out where is hammer. Anywhere hammer is there. See, this is the top. Okay, you are not able to find out any hammer in this. This is the bottom. Can you find out any hammers in this? No. So let us go. Let us go. Can you see here? Can you see here? Can you see here? Yes, no? Can you see this? Hammer in the bottom. Then you see there is an accumulation phase. Market did not move up also. Market did not move down also. After that, it started going up. See, after a fall, there is an accumulation phase. If you remember yesterday's Dow theory, after a fall, there is an accumulation period. After that accumulation period, it started going up, right? And also we got this hammer here, and also we got marbuza here, both giving you a strong signal saying that it is going to go up for intraday. See here on the top, you found one hammer, started falling down. Correct? Able to understand? Can you guys able to understand this? If yes, no, please let me know. Can you see here inverted hammer in the top? Can you see there is an inverted hammer? Again, it has fallen. Let us see Nifty now. Hammers will be there. Got it? Are you guys getting it? Please respond yes, no. Yeah. Thank you, Sunil. Sachin. Yeah, Pratima. So Nifty. Okay, can you find out? I'm going to take intraday positions, 15 minutes chart. Can you find out some hammers in this? Can you find out any hammers? In bottom, there is no hammer. In top, there is no hammer. Okay, let me take some one-day graphs. We'll find out if there is any hammers. Can you see any hammers? Can you see this? Anybody know about Doji Star? Anybody know about Doji Star? Yeah, no body. Can you see? This is what the Doji Star. Whenever there is a Doji Star after a candle, Doji Star is also another way of understanding. Okay, there is not much hammers. Okay, in this graph. So we'll move to the next one. Next was an interesting one. Okay, bullish harami and bearish harami. See, bullish harami, how it looks. Signals a possible reversal. So this is all reversal. Okay, reversal of a downtrend. So when the market is keep on going down, that downtrend is going to reverse and going to go up. That is what? Reversal trend, reversal of downtrend. Since the green candle indicates that bulls are making a strong appearance in the market. How it looks? A long run candle on a day one. So you see it is all day candles. A long red candle on a day one, a short green candle on day two. Green candle completely contained in the range of red candle occurs during a downtrend. It occurs during the downtrend. Whereas in bearish harami, first green candle will come, after that red will come. Whereas in bullish, after red, green will come, but this green will be within that red candle. Yeah, can you see here? Within that red candle. And it occurs in the downtrend. Let us find out. I actually found that in the IDFC. Let me go to one day graph. Okay, here can you find out this bullish harami anywhere in this page? In this page, can you find anywhere? Bullish harami means what? Again, you see After a red candle, there should be a green smaller one. After a red candle, there should be a green smaller one. Just to find out, it is there. Yeah. After a red candle, there should be in between that red candle, there should be a green. It should be like this. The green should not be above the red. It should be within the green, within the red, within the red. Can you find out something like that? After a red, there should be a green candle, but the green candle should be within the red. Anywhere? Okay. I found one. I'll just mark. I found one. How about you guys? No? Okay. Can you see this? Can you see this? There is a green candle. Okay. There is a green candle. Within that green candle, there is a body, and even the wig is also below that. On the top, and the top it has reached. Where are the shapes? Can you see this? So what is that? So you can see here, that is bearish harami. First the green candle has come. After that, within green candle there is a red. See, which occurs in uptrend. See, it is an uptrend. From market is going up, and there it is occurred. From there, the market started falling. Yes, can you understand this? Okay, let us find out any bullish bullish is there. So bullish means first red should be there, then green should come. Nothing is there here. That will come only in the bottom. Only in the bottom. No. See, look at this. Bearish. See, green and red. Green and red. Sorry, this is not one. I made a mistake. This should be in opposite side. Okay, let us see in Nifty anything we are finding out. I have taken one day. Can you just find out? This is the bottom. There is nothing is there. Can you see anything in the top? No, the top. Green and red. See here. Green and red. Again, this is not the right one. It should be bigger. Sorry. It should be bigger. The first candle should be bigger. The second candle should be smaller. Okay. Anything here? Nothing is there. It's engulfing P3 crores. Okay. See here, one engulfing bullish. Can you find this? Green candle and red is within that. Green candle rendered within that. So occurred at the bottom, but it has no meaning. Occurred at the bottom, it has no meaning. If it is in the top, if it is in the uptrend, then it has a meaning. See, there is one green candle, red is within that, then there is a downfall. Can you see this? May 20. This one? Here. See, red. Yes, you're right. This one. You're right, Sunil. Exactly. See, red candle, the green candle is within that. This is called as bullish harami. Red and green. Red, then green started picking up. That's it. Right. So same way that we have something called bullish engulfing. Okay. In bullish engulfing, what is happening? Bulls have taken control from the bears. So the market will likely go upward over the next few trading sessions. A small red candle in day one, a long green candle on the day two. Green candle complete the engulfs, and engulfs in the sense, see, the same way like bullish harami, but in the different side. See, small red candle and green bigger candle are occurs during the downtrend. So here also it is downtrend, here also it is a downtrend. Then you can see there is a change in the trend. So smaller red candle and a bigger green candle in the bottom, in the downtrend, in the bottom, or in the top, it should be a smaller green candle and bigger red candle. Then it is in the, it's going to be in the downtrend. Let us find out from IDFC first. Okay, can you find anything here? A bullish engulfing? Can you find any bullish engulfing? Please understand the difference is in bullish harami, the red is bigger, whereas in bullish engulfing, the red is smaller, whereas green is bigger. Okay, so both the way, whether the red is smaller or bigger, and we can actually find out two patterns in that. Let us find out something here. It should occur in the downtrend, so only focus in the bottom. Okay, only focus in the bottom of the candles. Can you find anything in the bottom of candles? See, red should be smaller than the bigger green. Anything in the bottom? Can you see here? No, this is not the one. Okay, let's see in the Nifty. Let's see in the Nifty. See this in investing.com automatically predicts this patterns. Can you see here? See, automatically. See here, it is telling bearish engulfing, but I'm not finding engulfing in this. Yeah, here it is. Can you see here? Can you see here, guys? Bearish engulfing. Yeah. See, bearish engulfing. A smaller green candle and red candle is bigger than that green candle. See, smaller green candle, red candle is bigger than that. Bearish engulfing. See, after that, just it's fallen, but there is a doji star is created. Then it went up. So here it is. So that is why it automatically predicted. See, engulfing bearish. Automatically prediction will come. Let us see anything else. This is doji star. See, doji star bullish. Um, just a minute. Okay, sorry. In between, I got. All right. What is that, Sunil? How are these trends generated? I'm not able to understand your question. Can you just tell me again? Sunil, I hope I'm audible. Can you guys please respond in the chat box? Am I audible to you? Yeah. Yeah. Sunil, what is your question? So from investing.com, the source of data is NSE. This is from NSE exchange only. The trends are generated. It is all automated process. Now we know that whenever this pattern is formed, we call this as bullish harami, bearish engulfing, then morning star, evening star, like that. So based on that, the pattern, whenever there is a pattern formed, the system itself identify this particular pattern and tell us. See, for example, this is three upside, three inside up. You can see this one is engulfing bearish. So where engulfing bearish? Let us see. See, red candle big and the green candle is smaller within that red candle big. See what we are telling? Red candle is actually it's bullish harami. Okay, sometimes it gives you wrong. See here, this and all we have not discussed. Hope you are able to understand this. So if you practice this, like you have to keep identify your I should, whenever you look into the graph, at least these patterns you should know. The 6 patterns what I've mentioned, these are the very important patterns. Morning star is nothing but there is a red candle, then there is a doji, then there is a green candle. So intense buying activity in the market by bulls increasing buying pressure and may indicate the beginning of possible trends. A red candle on a day 1, a doji with a gap down opening on a day 2, and the green candle with the gap up opening on the day 3 occurred during the downtrend. If this pattern is formed, then it is going to be bullish. Let us find out if there is any pattern like that in the Nifty. But for any doji in between, then we can find out that particular pattern. You understood doji? Doji is this. Okay. But we need green candle. See, red, after that green should be there, but we don't have green here. It is red, so that is not the pattern. This is engulfing pattern. You can see here in the bottom, red is smaller, green is bigger. Then after that it shooted up. Let us find out some doji here. Yeah, but green candle is not there. Okay, we will see in this particular graph anywhere. Yes. Can you see this? Can you see this? So there is a red candle, then the doji formed, then the green, then after that there is a rally of shoe. See here, there is a red candle, there is a small doji, then there is a green candle, then there is a rally. All right. Okay. So any doubts in this patterns? Otherwise we'll move forward. So just observe this. That is, you can make a note or you can take a pic. That is a bullish candle. These are the patterns we have discussed. These are the very popular and patterns used on real life. That is why I have selected only these patterns. Okay. Morning star, evening star, bullish engulfing, bearish engulfing, then harami, then hammer, marbusa. These are the popular chart patterns used in the market on everyday basis. Okay, let us move forward. Hope you guys are okay with that. Shall we move forward? You can try that patterns by your own. If any doubts, you can actually take my help. You can write a mail to me. Definitely, I'll revert back to you. All right. So now we are moving to the next level. There are other patterns identifying in the market. So whenever the stock price or Nifty price goes like this, and you can see there is a head and shoulder pattern is created. Like, see, this is head where the previous high is below from the head, and the next high is below from the head. Then this is called a pattern called as head and shoulder. See, this is the neckline is drawn, head and shoulder pattern. We'll just quickly try to find out anything is we are able to see in the Nifty graph. Okay, we will not waste, keep searching things, but if we get, it will be good for you to understand better. That's what I'm trying to do here. Okay, in weekly graph is not available. Maybe day graph. See, we wanted the like this. Yes, higher high, lower high. Exactly, you're right. Can you see here? This is inverted head and shoulder. Let me draw a line for you. See, this is the head, shoulder, shoulder. But it is inverted. Then it started going up. Whereas here, then it started coming down. That is all the difference. So if it is the head and shoulder, then below this it will start coming down. Whereas it is inverted, it started going up. Got it? Can you guys respond in the chat box? Able to understand this? Head and shoulder? All right. We'll move to the next level. This is called as double top. So whenever there is just a top came down, that is high to low and low to high, then if breaks this neckline, then it can, you can see it is going further. This is called as double top. Double top generally forms, let's see if there is any double top in Nifty recent time. See, you can see here. Can you see this? Hope everyone is able to understand. See, double top, 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 but not much actually, but still. After that, it started, see here, I will draw a line. This is what the double top went up, came down, went up, came down. But after this neckline, it has dropped. Double bottom also you can find out something like that. Okay. Okay, fine. We will move to the next one. Double bottom is also there. That is what I told. Double bottom. Then we have rounding bottom. This rounding bottom I found in IDFC. I'll just show you. Can you see this rounding bottom? Actually, it's cup and holder. See, it is just came like this, and after that there is a holder. Cup and holder is next one. See, this is what cup and handle. There is a U-turn, then there is a handle. Once this handle is crossed, then you can see there is an upward movement. That is why I am recommending now IDFC Bank to purchase. I personally purchased. See, it's a cup, then it has come down. It has broken this. If you draw a line for the handle, see the handle is broken and it is in the consolidation stage. See, after that it went up from where? From 55 rupees to 58 rupees within from 19, 20, 21, 23, 3 days time. It went up. Hope you're able to understand this. Cup and holder, cup and handle. Yes? Can you guys please respond? Yeah. Next is we have wedges. Then we have wedges on the bottom side, wedges on the top side. Then we have pennant. Then we have ascending triangle. Then we have descending triangle. Then symmetric triangles. All these things I'm going to show in the graph now. Okay. Maybe we will take some time to understand this. How I'm going to draw this wedges. Wedges, you can see it's simply two lines where the graph is inside. Let me go to the IDFC initial graph. Okay. Let me draw a simple wedges for you like this. Taking a trend line. Can you see? I'm drawing like this. Okay. Then another wedges I'm drawing here. So I was expecting IDFC Bank for intraday. This is for intraday. Okay. See, this is for 15 minutes graph. 15 minutes graph generally it is for intraday. See, I've drawn this wedges. The stock was trading inside this, but after hitting the top, it has crossed this bottom. For intraday, you can expect the stock to close at 59.20 now. It is in falling range now. From 60, today peak is 61. From 61, it has broken this support wedges. Okay, support wedges is broken. It is falling down. You can expect today the stock to come to this level. This level is nothing but 59. But before coming to 59, it should break this level. This is the support I'm looking here today for IDFC. So see, it has came down, touched this support. Can you see here? Can you please understand what I'm trying to do here? See, whatever lines I drawn here, it is based on purely support and resistance. See here, the market went up. Then from there it has fallen. Then tried to went up. Again it's fallen. It has fallen, but took a support here. And next trading day only it has fallen. Again, this is a support. From the support, it has rebounded. After crossing this resistance, again it went up, touched this wedges resistance, came down. Again, this support, it took a support here, went up. Again, came down, wedges support is there. So it took a support over there and again went up. The wedges resistance again touched and came down. Now the wedges resistance is broken. It has fallen. Now the stock will take a support in this red line at 59.90. If it is falling below 59.90 on intraday, then it will fall to 59. Okay, 59. That is what understanding. But if it is not crossing this red support, then it can bounce back. It can bounce back. Again, it can come up to this level, that is 60.70 or 80 today closing of IDFC. Hope you guys understood what I'm telling. Can you please respond in the chat box whether you understood what I'm doing or you are unable to? Okay, that's great. Hope you're definitely you are telling. Okay, that's great. You are understanding. That's great. All right. Yes. Fine. So we'll move to the next level. So wedges we understood now. Next, I will show this descending triangle and I will show you symmetric triangle. Okay. Let me delete off all those things. This line, let it be. I will just draw one more line here and I will show this as a triangle too. Can you see this? See? Descending triangle. So it has fallen below this. You can actually keep observing the supports and resistance only. We will try this on Nifty now. Let me go to 15 minutes graph and little zoom on. Okay. See here, double top kind of thing it is created. Now let me draw a line here. Nifty currently. This just a line I'm drawing. 15 minutes graph. You can see the market is going to fall. See, this is 11th. There is a gap up opening. This is called as gap up opening. Yesterday closed somewhere here. Yesterday closing was 15,737 Nifty. Okay. And opened today with high price 15,797. How much is the gap up opening? Almost 50 points gap up opening. And from there it went up and it came down. It is at this level now. Below 15,790, it can come to 15,745 today itself. I am It's looking market to come to this level today itself, because there is a gap up opening. It will come down to this support level, it will touch here, and it may go back. It will be trading in this between range today. Hope so. We can, this is my analysis. What range? From 15,746 to 15,790. Between this range it is going to trade. Above this, if goes, then 15,820. We will see what is the next candle. If it is bearish candle, then we have to see. If it is green candle, if it is bouncing back, then it will not fall down. Okay, this is a support, but I'm looking. Now let us draw some triangles. Let me go to HDFC itself. So this is 1 day graph. So this is one way. This is the asymmetric triangle. You can see here, it is inside the triangle. If it is crossing above side, then you can expect this IDFC to go up. That is what I'm actually expecting. So it has tried to went up, again fallen, and it is going up, again it's fallen. If it is below this particular line, then you can see there is a downfall. But looking at the market condition and other things, I'm expecting to go up. The short-term target for this, if it is breaking this upside triangle, then the short-term target will be of the stock is going to be 68. From where? From 60 to 68. Within how many days? I'm expecting this to happen maybe within a week, or because it's 1 day, within a week, 7 to 8 trading days, you can expect the stock to touch up to the level of 68. Currently it is trading at 61. This is what my expectation. This is only on probability, nothing gambling. I am doing my proper analysis and telling. If it is falls below this triangle, then I am going to keep a stop loss. If it is above this triangle, then it is going to touch 68 within 7 trading days. You can watch this company. It is called as IDFC First Bank Limited. If it is falling below this red line, then I have to keep somewhere the stop loss. Okay, maybe I will keep my stop loss somewhere at this price, that is 58.60, or below that I can keep 57. I'll buy at 60 rupees, 3 rupees stop loss. If I buy 100 shares, 300 rupees is my stop loss, and I'm going to gain for 700 rupees within 7 days of time, or 7 to 8 days. So this is how your stop loss should be. 1:1 or 1:2, like that it should be. So 300 rupees loss and 700 rupees profit. So it is 1:2. Correct? So you can draw here using that. See, my stop loss is going to be, and my reward is going to be 12%, 7. Okay, stop loss is going to be this much. So this is how you can make use of this investing.com. And I have made this thing, long position. For long position, I'm taking long position, and I made here. Got it? Yes. Are you guys with me? Am I making interesting, or it is boring? All right. So we are moving ahead. What we have discussed all this time is only patterns. So all these patterns, maybe I have discussed not very high patterns. Actually, I've discussed which is practical and usable, and people whoever is using. Okay, I use few patterns out of this, and those patterns definitely I uses this wedges. I uses pennants, ascending triangle, descending triangle, asymmetric triangle. I don't follow the names, but definitely I like this triangles I keep creating. It is not, I practically when applying, I don't call this as asymmetric triangle or whatever it is. I find this as support and resistance. And if it is breaks upside, and you can expect the market to go up. It breaks downside, it's going to fall down. That is what my understanding. That's how I do trading on this. So this is a short-term trading. Today you buy at this price, and within 7 working days, 7 trading days, it is going to touch 67. Otherwise, it's going to fall, and the stop loss I'm going to keep at 58. That's all. So 2 rupees, 3 rupees stop loss, 7 rupees is your target, which is decent. With that is how any business will work. Correct? You, without taking a risk, you cannot run a business. Correct? So the same way, I'm taking some risk by keeping 300 rupees as stop loss and 700 rupees as my profit for the next 7 days. Hope you understood. Let me move further. We're going to discuss some indicators now. Before getting into indicator, I just would like to tell something here. How many of you feel when it comes to technical analysis, actually, even when I was doing my MBA, and after completing my MBA, then I read a lot of technical analysis. Then initially people taught me only these indicators. I was so fascinated by looking at these indicators, and I was thinking these indicators may do wonders in earning money. How many of you feel like that even today? I mean, you guys are just starting your things, but still, how many of you feel these indicators are best comparing to the chart patterns? Can you guys please respond in the chat box? Hello, guys, are you there? Can you please respond? Exactly, Kishore. Superb word you used. Kishore said, I don't think, because indicators are always lagging. Please understand this word, what Kishore has mentioned. It is lagging. These indicators are lagging. It is not on the spot. It is lagging indicators. Okay, it is lagging indicators. So always the best method to take trading position or to take investing position, you have to find out breakouts. What do you mean by breakouts? See, now I showed you, this is what the breakout. If breaks above, then I'm sure that it's going to touch 67. There is no other support in between. Can you see here? This is sure breakout. See, further, I'll tell you some more thing. I'll just open this. Nifty one day. Let me go to the, see here, last time when the market fell, okay, see, it's a beautiful triangle it's formed. Can you see? It's a clear breakout. From there the market actually started going up. This is one day graph. And last April, when the market has fallen, when we are supposed to purchase, that is what the big question, correct? Entry, when to buy, when to sell. That is the biggest question when it comes to stock market. We will not know when to buy and when to sell. You would have started felt after falling up to this place, you would have felt, this is the place we are supposed to purchase. This is the place you are supposed to purchase because it is fallen. But after that, again it has fallen. Then you would have purchased here because that is a low. Again you would have purchased somewhere here because that's a low. We don't know which is low. It is like falling knife. When you are going to capture or catch the falling knife, what happens to you? It will hurt you. So this is what losses when you are actually going to catch the falling knife. So you need to understand the support and resistance, very important. See, now I just draw this particular line. Okay, once there is a breakout, see, it has fallen, touched here, went up, again came down, went up, again came down. Once this breakout has happened, I will buy at that place, keeping a stop loss below that breakout. Actually, for breakout, you no need to have a stop loss. It is going to be sure. But still, to have a risk management below this support level, below that, maybe next support level, I'll be keep my stop loss. Then I hold this. See, it has gone up, 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 gone up. So you have to identify like this the breakouts. Hope you understand this, right? So indicators are lagging. Always when you grow or when you get experienced, you will understand in the stock market, these indicators will give you signals, but it is not comparing to this breakouts or other things. It's not that sure, but still you can try these indicators. We are going to get into these indicators now. We're going to discuss very handful of indicators, but very powerful indicators these are. Okay, I'm going to show mostly RSI, Bollinger Band, MACD, and VWAP. Okay, very interesting and powerful indicators these are. Okay, all right. Let me take you to the website. We'll take Nifty itself. I'll remove all this supports and resistance from the. Okay. Now, before getting into this indicator, I just tell you a few basic things. How to make this timing. Okay. See here in investing.com. Can you see here? This is 5 minutes graph. This is 15 minutes graph. Then we have 1 hour graph. Then we have 1 day graph. Then we have 1 month graph. Then we have 1 day graph. If you click on this, you can see 1 minute graph. So every 1 minute this candle is formed. See here, every 1 minute this candle is formed. But I will advise, not only I, most of the technical analysts will advise not to trade anything based on this 1 minute candle. You know why? Anybody know why? Why not to trade on this 1 minute candle? Anybody can tell? Kishore, do you know about it? Or Sunil, Sachin, Sachin Kumar? I think you'll be knowing. Why don't we trade on 1 minute chart? Okay, Kishore, that's right. Sunil, what is your answer? Sachin? Sachin, Sunil, sudden fluctuation. Chaitra, Bharat, Chetan, Darshan, Likita, Praful, Pratima, Rajrupa, Sumant, Shasikala, Sanil Kumar, Swati, Tejashwini. All right, fine. Too less time to judge. Okay, I will tell you. You guys are right. What is the problem is there will be too much of noise. Noise in the sense, look at the fluctuation of 1 minute graph. Just today's graph on today's morning, from morning to now. Look at this fluctuation. The fluctuation seems to be very high in 1 minute. And see here, from here it starts. The fluctuation looks like this, or every 1 minute, and you will get panic in this. You will be not able to time it properly. Exactly, you will get panic. You'll not able to time this properly. So generally what people say when it comes to scalping means, what is the meaning of scalping is, you wanted to do a fast trade, then you are called a scalper. Particularly in cash market, in derivatives, we'll do scalping in the sense, I will observe the market for 10 to 20 minutes. If there is a momentum, then immediately I will take position. Then immediately within 5 to 10 minutes or maximum 15 minutes, I will book a profit and I'll come out. Then it is called as scalping. Very fast in execution and very fast in trading. I will trade the scalping with 1:1 ratio. That is 1% stop loss and the same way profit. Whichever comes first, I will take it and come out. That is called a scalping. For that, I may use 5 minutes time, 5 minutes graph, or sometimes I use 15 minutes also. But more than 15 minutes, 15 minutes also is good, but 5 minutes is preferred, and 15 minutes also I will trade. Scalping can be done in both. When it comes to intraday, you wanted to trade on everyday basis, you wanted to buy and sell on everyday basis, then you are supposed to get into only this 15 minutes graph. We are not going to use 1 hour. We are going to get into this 15 minutes graph. You have something called, we have something called a week graph. This week graph will give you a short-term perspective. Short-term in the sense, whenever you see the weekly graph, you can actually say what is going to happen in few weeks. See, this weekly graph of Nifty says it is bullish. It is very bullish. For the next few weeks, you can see the market is only going up only. Weekly graph shows that. Look at the monthly graph. Monthly graph is also looks very bullish. So that is how you can make some directions. Day graph. See, day graph is touching new highs. You can keep a support level at this level and you can wait. Maybe day graph is used for next few trading days. Weekly graph is used for next few weeks. Monthly graph is used for next few months. What is going to be the position? So that is how we can use this timing of this graph. So generally for intraday, we are going to use this 15 minutes graph. Okay. Now let me take this 15 minutes graph, and so 15 minutes graph, how it is formed, you all know. Morning 9:15 when the market opened. Okay, when the market is opened at 9:15, 9:15 to 9:30, this candle is formed. 9:30.01, from that to 9:45, this candle is formed. Like that, up to now 12 o'clock. 12 o'clock, it is formed this graph. 12 to 12:15, another graph is going to form here. All right. Now let me add some indicators. How do you add this indicators in this is, can you click this? I mean, can you see this kind of graph, I mean, symbol here? That is called as indicator bar slash. Let me click on that. And I'll add here Bollinger Band. Just type here Bollinger Band and click on this Bollinger Band. You will get this some band like this. Let us understand this band first. Then we will get into the analysis, how to do. So whenever you click this Bollinger Band, automatically this particular graph, I mean, this particular 3 lines will be appeared here with this river kind of flow. This is called as Bollinger Band. The first line, what you can see here, this blue line, it is called as upper line. And can you see this red color line in the middle? This is called as middle band. This is upper band, this is middle band, and this is called as lower band. This is the understanding of Bollinger Band. So lower band, middle band, upper band. And you can see, just to keep minimizing the graph, whenever this band is drawn, the entire chart will be inside the band only. It will not go much outside. Right? Can you see that? Whenever it touches the bottom and it goes out of the Bollinger Band, that is the time you are supposed to purchase. See, for example, here, band, it has come out. You would have purchased at this place somewhere here, but after that it has fallen. So you failed here. Your stop loss would have hit. Now it has come down again. It has started going up. You purchase at this candle. Which candle? This candle. At 15,628 you would have purchased, and you have to keep a stop loss. You have to keep a stop loss at this level. Okay, you should purchase at here when this candle opens. This candle opens, you should purchase. So this is your stop loss, and you have to wait. What is your profit? You can see. See, you can fix a target up to this level. Just it's going up. Either you can book here or you can book here. That will be your profit. Or keep it like this. You would have taken a call here at 15,615. You would have booked a profit at 15,700. 75 points in one shot. And your stop loss is just 608 to 72. That is 25. 30 rupees stop loss, and your profit is 90. This is how you can use Bollinger Band. Able to understand? Any doubts? Please ask me some questions. Don't say only yes. If you ask me questions, I'll be very happy to answer. Yes. Are you guys there? It's like there's one Tamil movie. In that movie, Dhanush will go to an old bangla and he will shout, "Is anybody there?" Sometimes I feel like that in online classes. Hope you understand that joke. Yeah, because we keep talking. No, suddenly, if I don't get a response, that is what we feel. All right. Any doubts? If you have any doubts on this Bollinger Band, please ask me so that hope you understood. No doubts. Okay. So you can see whenever it is touching in the top, whenever it is touching in the top, it will come down. Whenever it is touching in the bottom, then it will go up. Okay, that is how it actually trades. See, now it touched the bottom from here. See, look at this, it has went up. So let us see only intraday. Actually, intraday today, can you buy Nifty? That is what my question. See, it opened itself above, opened itself above. So morning you should have sold Nifty to make some profit. You would have made profit, correct? Now we have to wait. Now we cannot take any decisions, but I am finding some momentum here. What is it momentum? I'll just zoom and I'll show you. It is little risky, but still you can take a call. What is that is, you can buy currently at Nifty at 15,793. Currently you buy, it is broken. See, it has broken my stop loss. I was expecting to keep a stop loss at this place and to take a position, but Nifty is falling. You see, it is going to cross this midline. That's what I said. It is a risky call, but it is broken. The mid band, that is broken. See, it is falling. Can you see this? Can you see this? At 12:15, I guess this candle will stop. We will see where it is going to stop. Okay, by the time I will add one more indicators in this, I will add RSI. Just click on RSI, relative strength index. This calculation and all, I think Sar is going to show you. So I'm not going to teach all this calculation, but I'm just going to show how it will be useful to apply. So now you see in RSI, what you can understand is there will be two lines. Can you see this dotted line here in the top? That is at 70 level. And the bottom level, you can see there is one more line at the 30 level. So RSI generally, if it is above 70, then it is called as overbought area. If it is above 70, then it is called as overbought area. When it is below 30, then it is called as oversold area. So let us see if there is any area like that. See, can you see this? See, Bollinger Band also told us to buy. Even RSI also given us to tell to buy. So when you have to buy is not when it is coming below. When it is overtaking, you taking a U-turn and crossing this 30 level. That is the place you are supposed to buy. So crossing at 30 level, can you see my dotted line where it is touching? Exactly that green candle where I took a position using a stop loss and took a position in the next candle. So it is above 30 level. I took a position. Then where did I booked profit? Exactly, I booked profit here, which is in the mid of RSI at 50 level itself. I booked. If you are sure, you can keep trailing stop loss. What is the trailing stop loss is? You can change your stop loss from this level to instead of your purchase price. Okay, then you can hold for the 70 level. Once it reaches the 70 level, you can book profit. But it is for intraday, so it have not crossed the 70 level yesterday. So it's better to have whatever profit you're expecting. 2:1 you expected, then it's better to book a profit and come out of this. So market may anytime give a reverse trend. So it's always better to book profit what you have. Okay, so RSI has given a pure buy call here. Even this Bollinger Band also given a pure buy call. So after that it went up. Okay, after that it went up. Now you see RSI currently it is in downfall. See this candle, it is also falling. another 1 minute, we will see where this candle is going to stop. If it is going to be green color, then it is good. If it's going to be red, then it is going to be downtrend today on Nifty. Morning open very positive, and you see there is a gap. No, this gap will be covered today. This gap will be almost covered today. That is called as gap theory actually in market. So RSI is this. RSI is when there is above 70, you have to book profit. Whenever it is below 30 and taking a U-turn and crossing the 30 level, that is a place where you are supposed to purchase. Not when it is coming down. When you're coming down, if you purchase, you may get panic. You would have purchased somewhere here. You would have got panic. So you should not. Look at this. What I said. There is a red candle, full big red candle. The next candle is also forming now at 12:15. I said 12:15, 12:15. It is forming. So you can see the support level. This is what the support level I was expecting. But today that support is broken and the candle has come down. So now where is the support? You can see this is the support. Support at 15,746 today. Or the green candle is formed. Below that, if it is not falling, today it will sustain at the same level. If it is falling below 15,747, then it can come down up to this level, 15,569. But this is the support I am looking here. Can you see this? This is the support I'm looking. If it should not break this support, if it is breaking, then you can see it will come up to this level, Nifty. If that is also broken, then Nifty will come to this level. This is the three supports for your intraday trading today. But what I would suggest is you can buy the Nifty now for intraday trading. Just listen to me carefully. You buy the Nifty now. Keep a stop loss below this red line. Okay. Buy Nifty now. Keep the stop loss below this red line and wait for a target of minimum 15,098. Currently it is 15,078. Okay, 98 is my target within next few 15 minutes candles. Okay, that's my target. Now currently at 15,768. My target is 15,790. 90 and above. So 30 points. Hope you guys are with me. Hope you guys are with me. Mid band, I'll tell you, Sachin. 1 second. Okay. What is the use of mid band is? Shall I remove this red lines? Just for your understanding, I have put. Yeah. See, it has fallen, and if it has crossed this red middle band, and you can actually wait for the stock to hit the upper band. Mostly it will happen. Okay, for example, any places you take, it has touched the lower band, crossed the middle band, but it tried to cross it, it fallen. Again, it is crossed and it touched the upper band. Generally, it will happen. From the low to high, always it goes. From the low to high, always it goes. See here. See this. This is very interesting. It is low, but if you purchased somewhere here, after that it did not go up only. You failed. But from there to here, it didn't go. But after crossing the mid, it started going up. See, this is called as cheating. The market cheats you sometimes. You need to be very careful. So these indicators may lag you. You may not be 100% sure in this. So you need to confirm your trend using another indicator. So using RSI, see RSI did not fall below 30. After that, RSI is trading only this range. Then only here it started picking up. Only here it started picking up. So this is the place actually you're supposed to purchase, not here. Not here. And you can also understand the market is very flat. The band wide is not that great. So it can be volatile also. If the band wider, then it is always good. See here. Look at this wider. The band wide is all good. So it is good for trading. If band is narrow, then it is not good for trading. Band, if it is narrow, then it is not good for trading. It is volatile, or it is very, side wave. It is in the accumulation phase. So band should be bigger. It should be like balloon. Then you can expect a big movement. See here. There is a narrow band, then the band is opening up. See, it is going up like this, it's opening like this. So this is the place. This is a place. It's went up, and you can buy actually. It's went up, it's crossed, but you can expect it to come down. But see, it has gone up because the band is widening up. So midline, it shows you how much it can go up. After crossing midline, it can go up. So you have to keep waiting. If it is crossing the midline quickly, then it can touch the upper line. That much target you can actually expect. Let me show some other stock, maybe Reliance. So let me add MSI and RSI and Bollinger Band. Okay. Look at this. So it went up. There is a big green candle, red candle. You are supposed to sell at this, keeping a stop loss here. It has fallen to the lowest. Touched here. Again went up. See, once crossed the middle line, it went up, touched the highers. If it is not crossing the midline, you can you can expect the market to sustain at higher side only. That is why this midline is used. Hope you're able to understand. See here. See, it does not cross the midline. Sustained, went up. So midline is used for that. Now you see, it is at the peak. It's at the peak, came out, but you can see it is going to be a flat. It's going to be a flat. It is not creating any. See, it is going to be a flat. You cannot take any call on Reliance as of now. You need to wait. But Nifty, you see, Nifty I told to purchase. Let's see what happened to the Nifty. It's keeping a stop loss somewhere here. You purchased. We'll wait for the next candle where it is going to form another 7 minutes. Okay. So we cannot take any call based on the Bollinger Band. Now based on RSI, you can see RSI is above 70. It has fallen. Again, it is taking a U-turn. Now it is at this level. So you should not buy. Maybe if you have bought some time back, then you should book profit. Otherwise, you should not buy this Reliance Industries as of now. Got it? Based on these two indicators itself. Let us try some other company. Maybe let us try Tata Motors today. Tata Motors is also at the same level. Can you guys tell me some other company name? Let us find out. Motor. See, Hero Motors is actually started falling. Band is closing. You can see the band is closing. The band is closing. RSI is coming down. Volumes are reducing. Okay, so Hero Honda may come down. Let's say any other company. Can you guys tell me quickly some company names? I will show you the graph. Which TCS? This is interesting. See, this is very interesting. See, now it has peaked the high. Peaked the high. RSI is going above. Now you have to wait and watch where this particular graph is closing. Then, if next candle, if it is red, then you can sell immediately, keeping this highest candle as a stop loss. Hope you are able to understand what I'm telling. If next candle at 12:30, the candle, if it is going to red below this green candle, then immediately you sell, keeping a stop loss as this green candle, the highest 3,300. If it is highest, keep there as a stop loss. Then you have to sell this for a minimum target of 3,001. Yeah, 3,000. Now it is 3,253. At least you can get good profit if you sell this, but you have to be very careful with stop loss. We will see at 12:30. Just remind me, 12:30 we will see this TCS and as well as Nifty. See, stop profit. It's not stop profit. It's about what you want. How much is your profit? 1:1, 1:2. You have to fix that. That is in your based on your candle. Now, I told you to take a position here. Okay, so I am thinking 1:1. What is this candle? This green candle is one candle. I am expecting double of this candle to be a profit. So double candles I am expecting. So I will book profit somewhere here. That is what strategy. So based on the candle, the stop loss candle, what you are going to take, where you are going to take, based on that you can take your profits. So I am looking here is 1:2. So 1:2. Whenever it touches 1:2, you have to book the profit. No need to worry. Oh, after selling it has gone up. That and all is not. Way to trade in the market. You should not think about whether you lost or made profit after you selling. Whether market went up after you selling, market recovered. All these things are nonsense. You should not look into those things. When you are doing business, how are you going to do? In the same way you have to do. Always there is a risk part is available. Attached with many business. Even if you are trading, you have to assume this as a business. If you have lost some money, you have to assume that as a capital. Then only you can sustain in stock market. Initially, when you trade, you will lose money. That you have to keep that as a capital. You should do not repeat that mistake and continue doing the good things, not the fault thing what you have done. Yes, you can, but in investing.com we cannot do that. In trading views, actually you can do that, Sharath. Okay, let me add one more indicator here, VWAP, and I will tell you what is the use of VWAP. VWAP is one indicator which is very useful. Let me change the color of VWAP. Okay, let me give green color. Hope you can see a green color line in this. See VWAP. Let me remove the Bollinger Band so that you can clearly will be able to see. Just for some time I'll remove the Bollinger Band. So okay. Okay. See, VWAP. This is very good actually. It is the volatility is also included in this. Okay, so VWAP is one of the best indicator. Okay, volume, sorry, not volatility, volume has been included in this. Okay, so we no need to see here the volume separately. See here, if the candles are crossing below the VWAP, then it is bearish. When the candles are going above, then it is bullish. Very simple it is. When the candles are below, then it is bearish. When the candles are above, it is bearish. Sorry, above it is bullish. You can use this with some more indicators actually. See, it's above, it's bullish, went up. See these places, it's confusing and it is in straight. Okay, so you should not take any calls in this. If it is crossing, then you have to take call. Hope you're able to understand VWAP. Any doubts in this? Now next I will show MACD, which has divergence in that. Sharath? Moving average, convergence and divergence. MACD. Because why we require this divergence is sometimes the market will cheat us. We will think that it is going to go up, but the indication, everything would show it is going to be positive. Only this divergence will give us the proper signal. Look at this, my target is achieved. It is 12:30. Nobody reminded me. Look at this. It is currently at 84. See, I told to purchase somewhere here, keeping a stop loss at this below red line at 747. Now it is at 1583. 1590 it is going to touch for sure. 15790 it is going to touch. This is called as momentum trading. What I did now is called as momentum trading. Definitely it is going to touch 790. I got 30 points on Nifty as profit. Nifty lot size is 75. Nifty you cannot buy in cash market. In futures, if I would have bought, 30 points is my profit. 30 into 75 is my profit today. Hope you're able to follow me. You understood this? Now let's see what happened to the TCS. There is a candle. Oh, this is 1 day candle. I'm really sorry. It is 1 day candle. I didn't change to 15 minutes. Yeah. See, 15 minutes candle. It's now negative. But you cannot keep a stop loss. It's going to be very risky if you take this trade. Okay, let me add MACD in this to find out what will be the directions. MACD. This is called as moving average, convergence and divergence. Okay, just add. You can actually even change the settings, but you can keep it as default everything. See, TCS almost in accumulation phase for a long time. If you draw a actually you can draw a straight line instead of that. See, it was in the same range, it not go up, it not come down. It is in the same range for some time, maybe 2 days, 3 days. Then suddenly there is a breakout. It started going up. See, from this level at 3,229 to 3,300. So 70 rupees it has gone up from here. Now what does this MACD says? You can see here clearly we can understand from MACD. I will explain what is MACD first. MACD is moving average and convergence and divergence. It has three things. You can see this blue color line, and there is a red color line, and there is a histogram. Whenever this blue color line, okay, if you wanted to see the setting, you can click on this. So blue color line is fast length 12 and slow length 26. This is what the setup. You don't need to change anything. Now whenever there is a blue line above and green line is below, the trend is positive. Whenever the blue line is above and the green line is below and the histograms are mushrooming, you can see the histograms are developing, then it is positive. See here, the red line is above and the blue line is below, so it is negative. It has actually fallen little. You can see here it's all confusing. It's only twisted lines. You can see it is not giving you any gap in this area. That is why it is not a time to purchase TCS at that point of time. You will get panic. It's all twisted MACD. You should not take any entry call. And a RSI also, you can see it is flat on 50 itself. There is not giving any scope to purchase. But whereas here, RSI did not give you any scope to purchase. Okay, but MACD, you see, it started giving this histograms as mushrooming up. It is developing, and there is a gap forming within blue and red color line. When the blue lines are giving a more gap, these histograms are growing. So if you are somewhere purchased this level, okay, histograms are going. See this level, if you are purchased, if you are purchased somewhere this level, see our breakout is also showing the same level. You should buy after this breakout. So if you purchase somewhere here, MACD started going up. It's a it's a bullish. It started giving you good histograms hikes, and here also you can see it is going up higher. Hope you're able to understand this. Any doubts? Any doubts in this? See, it's a negative candle here. It has come down 87. It touched. After that, it didn't move up. It did not touch 90. Let's see. Okay. So you can also add moving averages on this. For example, see the Nifty. Let me remove this VWAP. You can just add moving averages and exponential moving average. Okay, just type here moving average. Click on that. Then add EMA, exponential moving. Now I'll change the color of this too. Instead of both are black, blue and red I will give. Okay. See this moving average also will give you signals like this. You can see one is 9 moving average, that is simple moving average, and another one is EMA, that is exponential moving average. Both are 9 days I've taken. So you can see here, when there is a downtrend, the blue color moving average, that is blue color is which one? The 9 days moving average comes to the top, and the red one is going in the bottom. And whenever it crosses, this is a place where the trend is going to change. See, even our signal is also same way, same place. So it is going to have a crossover. It is crossed over there. So that is the place we are going to purchase. And after that, you can see there is a wider gap. It's a positive, and here again took a crossover. So according to moving average, you may book a profit somewhere here, but I told wait for just two candle. You don't need to wait for here. So two candle, in the sense you would have booked a profit somewhere here, which is same as this level. See, this is also very interesting. So red has come up, and you see it has gone down, and blue has come up. See, blue is here in the top. When the blue is coming down and red is crossing over, that is the place where you are supposed to purchase, if only following moving average. But you need to take confirmation with other indicators too. Only with one indicator you cannot do any trading. All right, hope you guys are understanding what I'm telling. Anything you want to know, anything else in the indicators, or any other indicator you want to know specifically, please tell me. That not possible. Okay, so just add here WMA. WMA I added, which is in green color, you can see. Okay, green color is WMA. Now we can have all the three, that is WMA is there, EMA is there, MA is there. Now WMA and which is one moving average, the blue color line. So you can keep changing these numbers to get a better analysis. For example, DEMA, I'm going to change the inputs value. Instead of 9, let's say I'm going to make it 12. Look at this. If I make it to 12, then the signals are changing. So let me not make it to 12. 7. Can you see here? It is actually widening up. Signal is a little faster. So this double exponential moving average I have not used in trading platform and other views. There is one more moving average exponential and soothing exponential moving average is there. SMA, not SMA. Yeah. So that I will be using, but based on moving average, I'm not taking any calls here. I mean, generally I don't do. Okay. See, exponential moving average is red color line. DMA, that is double exponential moving average, is in green color line. See, you can, whenever there is the red color line is above DMA, then if it's crossing over, that is the place where you are supposed to purchase. So we got a purchase signal somewhere here. Okay, if you purchase somewhere here, it is actually showing good profits, but there is a crossover here. There is not much profit you would have made here, only using this concept of moving average. You need to compare this with other indicators, whereas RSI did not give you any buy signal during that time, whereas moving average got confused and telling us to buy something. Look at this. Green is above, took a big gap and cut down the moving average, that is the EMA, exponential moving average. Then green is down, but you can see the green line, that is DMA, it is going to overtake again red. See, that is why there is a green candles are forming. See, my target is also going to achieve. It is 15,787 now, 88 now. So this is called as momentum trading. This is how you can do a momentum trading. I told to purchase when I saw this long red candle out of from the Bollinger Band. Based on that, I said, see, it's a pure, and also it looks like red big candle and green small candle. What is this pattern called as? In the bottom side, what is this pattern called as? Any idea? Yeah, Harami, are you sure? See here, red big candle and green small candle. So what I observed, red big candle and green smaller candle within that red candle. So this is Harami, and where it is formed, occurring during the downtrend. See, it for intraday it is the bottom. For intraday this is the bottom. It is occurred during the downtrend. So, and this is what the momentum I've captured. See now, it is 15,792. Within 15 to 30 minutes, I made a profit of 30 points. This is how you can do intraday trading. I have not used any indicators there. Only on the momentum. Only using the support level. This is the best way. Price action, momentum, swing, all this will work. But support and resistance is the important thing. Okay. Anything else? Anything else? Any doubts? Any doubts? Or any other you wanted to know any other indicators you would like to know, then I would explain that. There are so many indicators and oscillators. I am not going to use any of this thing. I will use whatever I showed. Bollinger Band is one of the best thing. With that, RSI, MACD. That's it. WAP. WAP is interesting one. You can use it. I don't use this double, triple, all EMIs I don't use. Sachin, anything else? Directional movement index also I will show. That is very easy and interesting one. This is called as the directional movement index. This is very simple to understand. You can see there is 3 lines in this directional movement index. Okay. This three lines, what it shows is, you can see there is an orange color line, there is red color line, and the blue color line. Whereas this green orange color line is called as ADX. Let me change the green orange into green. Yeah. So orange color line is called as ADX. Okay. ADX. That is average direction. Whereas this green color, whereas this red color is called as negative line and blue color line is called as positive line. So you can see at this point, when the red color is above and the blue color is below, it's a pure negative. And the ADX line, the average line, is also crossing over the red and it is above. Then it is 100% it's negative. See, that is the place where you got this particular fall. So after that fall, it is wider. It is wider. And where it directionally index has given a buy call is, it did not give a buy call at all until unless here. Here also confusing. maybe this place. Yeah, this is a place. Yeah, this is a place. It is given by call, and here. So green has gone up, red has come down. Sorry, blue has gone up, red has come down, and green has gone below the red. So this is the place you are supposed to purchase. And again, the trend is changing here. You are supposed to come out of this. See here, it is confused here. But you can see again, the blue is going up. The blue is going up. It is taking a divergence. Red is coming down. Red is coming down. So you have to wait and watch this area. And RSI, you see, it is in the middle. Let us put Bollinger Band and watch. Look at this Bollinger Band. It touched the middle, and from the middle it started going up. So it may go up to 1819. 1819 it will reach today in Nifty closing. We have another 2 hours of time, right? It may go up to 1819. Okay. So see, TCS, I told to take a short sell call. It is coming down. Okay, fine. Sharath is asking about 20 EMA and 50 EMA. You can use that. That is also good one. Okay, let me close all these things. I will just show you. So EMA, just change the setting. Put here 20. Apply here. Be in blue color. And the EMA. Other one is 50. But I will change this color. Instead of blue, I will change it to maybe red. Yeah, see here, the signal is a little late. See, blue has come down, red is going up. So when there is a crossover, there is a change in the trend. Then after that, it is same level. Then there is a crossover, there is a change in the trend. See, now you can see the EMA 20 and 50, it is clearly, it is not showing any downtrend here. But whereas all other things shown as some bad signal, but here you can see it is pure positive, and you can see the momentum is picking up. It is now 794. And also see the support, it touched the line and went up. If it is falling below this, then it's a problem. See here, the entire graph is above the blue line only. If it has fallen below blue and red, then it's bearish. If it has gone up, then you can pick it up. See, look at this side of the graphs. There is a clear crossover. After that, it went up. See, the graph is completely above these two lines. Then it has came down, but it not come below the red line. But again, from there, it's picked up. So as Sharath said, it also acts as support and resistance. But instead of that, you can draw your own support and resistance. That is what I feel. But it's up to you. It's not that what I'm telling is what mantra. You can explore. You can explore EMI, exponential moving average, all those things itself will give a lot of insight for trading. Any other doubts? Otherwise, I have one last. Okay. See, what I'm telling is this acts as a support and resistance. Whenever the candles are below these two lines, then it is bearish. Whenever there is the candles are above these two lines, that is EMA 20 and 50, then it is bullish. That is what understanding. And also one more thing you have to understand. See here, when there is a change in the crossover of line, blue line is coming down and red line is crossing over, then there is a change in the trend. That is what is the meaning. Okay, otherwise it was positive. Suddenly there is a change in the trend. That is why it has come down. See, after coming down only it gives late signal. Actually, it is late lagging indicator. After here only market has fallen, but it has given signal here, so it is not that great, but you can use it as a support and resistance. That's all. See, it is above, suddenly it started below. Maybe you can book your losses or whatever it is and come out from this, because it stopped fallen below this EMA of 20 and 50. If it is above the 50 and 20 line, so 50 line is red color line. If it is above the 50 line, see here, above the 50 line, that is a place where you can actually purchase, and you can see it is going up only. So it touched, again gone up. So if it is below the red line, then it is difficult. You need to come out. That is what you can understand from this EMA 20 and 50. All right. Anything else in this? Anything you wanted to know? Otherwise, just one small slide I have. I'll quickly finish that, because very, very important. If I don't tell that, then no. Okay, Fibonacci. Okay, Fibonacci I'll show. See, Fibonacci retracement is something like there is a high to low, low to high, like that we need to connect. So for example, let me take some one-day graph. Okay, for example, low to high to low. Okay, let me collect this low to high by taking Fibonacci retracement here. Okay, this is a max formula. Fibonacci numbers are there. You can actually browse about this. So if I do this Fibonacci, it will give me some numbers. Okay. See, 0 to, so down to low I have given. So once it is crossed this particular line, what is this number? Let me close this RSI. See here, this is what 1.61. It is actually comes in percentage Fibonacci. So if it is crossing this level, the previous high, then the stock price can touch up to this level. That is first target. Okay, I will show you in another graph. Okay. Fibonacci retracement. Sorry, high to low. This is high and this is low. From high to low, if you draw and just click, leave it. Then you can expand this. Just drag this. What you can expect this graph, see it came down. This is the levels you can see here, 38%, 60%, 78%, like that it goes 1%. So when it is fallen from high to low you have drawn, then there is a green color candle you can see. It has gone up to 38%. After that, up to 60 level is called as golden retracement. Definitely, whenever if you find out this kind of falls, and if you put this Fibonacci retracement, we call this as a golden retracement. Again, the stock will bounce back. See, it has bounced back up to 60 level. It is guaranteed it will touch. After 60 level, whatever you are getting, it is a golden profit. Okay, so this is what Fibonacci you can see here, 38, 60%, and 78%. So it has stretched the candle from bottom to top. I have drawn, then the next candle is formed. You can see it has retraced about 38%. Then that candle itself touched the 60%. Then the next candle above 78% and went up, and it made a 1.61 tracing. That is more than 100% profit on that. This is called as Fibonacci retracement. This gives you targets. This is also nothing but it's something related to support and resistance. So 38% retracement, 68% retracement. So we call this as golden retracement. Maybe I need some more time for these things, but what I would say is retracement is okay, but I don't use retracement levels for my technical things. You can see here, this is also a place you can draw high to low, high to low, but there is nothing as worked out. You can see after here actually low, this is a low. Just expand this. See, this is a low at 0 level. It has crossed 20 level, 38 level it touched, then 68 level. So if you purchase somewhere here, you can wait for 38 level. This is a profit you can get. From 38 level, you can wait for 68%, 68 level. But after touching 68 and above, it has fallen. That is how you can make profit. This is the level. From 28 to 38 is one level of profit making. 38 to 60 is one level of profit making. 68 to 78 is one level of profit making. So we call this as golden retracement when it crossing 60. Hope you understood something from this. Fibonacci retracement. So you can click this and you can click on this Fibonacci retracement. All right, Sachin. Anything else? So just quickly, 2 minutes I will take. So you need to maintain a proper stop loss. Without stop loss, your trading will fail. You have to be disciplined. It's a business, not a lottery ticket. So make sure that you treat how you're doing a business the same way you have to treat your trading also. Planning is the key. Losses are part of your job. Accept it. Investment, time and money. Time is required and money is required. So please keep your ego out of trading room. You cannot chase a market. For example, how it will come down, I will chase, I'll keep purchasing. That and all, it will not work in the stock market. Simplicity, consistency, and patience are the key success in the stock market. Are 3 F's: focus, flat, and fast. Okay, so this principles you need to follow for a risk management. Very important. Stop loss, don't get panic. Stop loss is very important. If you don't do stop loss, whatever capital you put, you will wipe out all your capital, and end of the day you blame the stock market, This market and all is cheating. Whoever is talking about technical analysis, fundamental analysis and all, it's fraud. You may say like that. When you start disciplinedly trading, if you start following the stop losses, then this kind of words will never come into your mind or mouth. Risk management is a key success in trading. If you are not disciplined and if you are not having risk management, then whatever, how much ever money you invest in the stock market, end of the day, you will lose or wipe out all your capital. Trust me. It is a risky business until unless you have a risk management properly. Even our life is also same way. It's a risky life, but we take lot of measures when it comes to our life. Taking insurance, driving slowly, correct? Walking on the roadside, not on the middle road, right? These are the risk management. Same way you have to take risk management when you are actually trading in the stock market too. All right. Any other questions you can ask me? See, otherwise we'll wind up. That's it from my side for the day. Anything, any questions? I'm open for questions. You can ask any questions if you have. You can start preparing reports like this. This is also again from Wall Street Society, from our students have prepared. See, it's a technical report. Based on the graph, they made this kind of report on Mahindra and Mahindra. On 23rd 5th, they prepared this and they set a target of 960. They given why it is going to go up. See, it's a making head and shoulder pattern, bearish pattern fail. So that is what they given some based on the support and resistance. See, it's a took a strength and interest of bulls. Demand zone, they told. Triple bottom is also being observed, suggesting buyers take control and bullish trend. This is what the report says. This report is again created by commerce students. All right. Any doubts? Any other questions? Definitely, I will share this reports and all to sir. You can also work on this. You can look into this reports and you can actually make this kind of reports. It will help for you in getting a better job. Any other questions? Are you guys there? If you have questions, you let me know. Kishore? All right. Thank you. You being a wonderful audience and keep on chatting with me. And it's not easy to pay attention almost from morning 10:30 to 1 o'clock. Continuous attention you're showing. That shows your interest on this area. And I wish you all the best for you guys. And I wish every one of you to become a wherever you work, but you should be a successful trader or successful investment. I mean, should make money in the stock market. It's not just making money; it's to understand and creating wealth. That's what I would say. And take care, or stay safe. And I take this opportunity to thank the director and Keshav Rao sir and Chandrasekhar sir for giving me this opportunity. And I hope I met the expectation. And I would like to tell this. I was a student of Chandrasekhar sir. Sir taught me during my MBA days, right? Sir taught me derivatives when I was doing my MBA. And after I getting into the stockbroking, all those things, sir keep constantly calling me and giving me opportunity to deliver wherever he was. Thank you for that and trusting me and giving this opportunity for me, sir. Thank you very much, and thank you for all of you for being a wonderful audience here. Thank you very much.
Thank you, sir. on behalf of the management and the students, I would like to thank you for your time that you've spent with us. And I'm sure we've learned a lot about the stock market. It was a very interactive session, very knowledgeable session. And I'm sure we all have a number of takeaways from these past 2 days. It's been an ocean of knowledge. Thank you, sir.
Thank you,
Thank you,
Saravana.
Saravana. For a small correction, our director name is B.R. Venkatesh, not Keshav Rao.
Sir, I said director and Keshav Rao, sir, for both of us.
Okay. Keshav Rao is not there at all. Keshav Rao is in earlier
Okay,
college, not in the answer.
okay, okay, sir. I heard, I thought I saw us in college. All right, sir. Sorry.
No problem. Yeah, anyway, thank you very much. And hope the same relation continues forever as long as we are
Yes,
there
sir.
in a teaching field
Yes,
and
sir.
you
Yes,
are
sir.
in research. I'll be calling you. I'll be taking help of yours to
Sh-
enlighten my students.
Sure, sir. Sure, sir. It's my pleasure always.
And please share all the information and reports. And maybe if we require, we call you once again to help us to prepare those reports.
Sure, sir.
Be ready to help us.
Okay.
And share whatever we ask. Please try to share that. And definitely, we have learned something, and our students will be in touch with you and help
Sure,
our
sir.
students.
Okay, sir. Sure. Definitely, sir. We'll do
Yeah,
that, sir.
thank you. And
Thank.
I'll definitely give you a call later. I mean,
Yes, sir.
informally, we'll have a chat.
Sure, sir. Sure, sir.
Okay. Yeah.
Thank you, sir.
Anything else from student side? Yeah,
Somebody
that's it.
asked my
And
email.
yeah, note down that. Sir is sharing his mail ID.
All, I mean, smaller caps. No, doesn't matter in email. No issues.
All of you, please fill the feedback form immediately. That's